Okay, let's take a look at another contingency question. So in this question, Siddle Corp was recently sued by a competitor for patent infringement. Lawyers have determined that it is probable and very likely that Siddle will lose the case and that Siddle will have to pay between $100,000 and $250,000 in damages. Siddle follows IFRS. What entries, if any, should Siddle record in respect of this lawsuit? And what would happen if Siddle followed ASPE instead of IFRS? Okay, so let's just start with the two criteria. So we've got IFRS and we've got ASPE. Let's just remind ourselves. So ASPE requires it to be probable, or shall we say more likely than not? Say 51%. And ASPE requires it to be likely. So in this case, so in this question, we've got an amount, but the question here is that we've got a range of damages. So it says that it's going to be, it's like probable and very likely. So we've met both the criteria for ASPE and IFRS to record a journal entry. The question is, what amount should be recorded? And that also differs under IFRS and ASPE. So IFRS uses the expected value method, meaning that if it's in a range of possible outcomes, it takes the average of the range, whereas ASPE suggests we take the bottom of the range and disclose the fact that there is a remaining exposure. Disclose remaining exposure. So on that basis, let's do IFRS first. So we're going to have debit litigation expense, credit litigation liability, which will be an obligation on our balance sheet. And this is going to be, in IFRS, it's going to be the average of 250 and 100,000, which is going to be 175,000. So right in the middle. Okay. And under ASPE, we're going to use the bottom of the range. So it's the exact same journal entry, but we're going to record 100,000, which is the bottom. Credit litigation liability. And then we're going to disclose that there's a remaining 150,000 exposure in the financial statement notes. So there you have it. Those are the two differences between IFRS and ASPE. So both the criteria in terms of recognizing the journal entry, both of which happen to be met in this case, but also the way that we deal with the range of values. So if there's a range of outcomes, IFRS is going to take the average, or it's going to use an expected value approach. And if they're all considered equally probable, then ASPE is going to use the bottom of the range and disclose the remaining exposure in the notes to the financial statements.